They slide their chips in very gently when they have a good hand, and they slam them down on the table when they don't. It's just way easier to make money on stocks than it is cards.
When you look at a chart, what are you seeing that other people might miss?
Wow, we could take the whole interview on that.
Steve Barton spent over 11 years as a professional poker player, operating in high-stakes environments where most people lose and only a few consistently win.
Today, he runs In It to Win It, where he's interviewed hundreds of experienced investors and built a network of disciplined speculators focused on commodity markets.
Through those conversations, he's developed a way of reading markets that goes far beyond news, opinions, or conventional thinking.
What's your process for filtering through all the noise and deciding what's actually useful to you?
But my skill is the charts, and I go by what the charts are telling me. The chart is a visual representation of what millions of people think.
What makes a setup go from interesting to, I want to take action on this?
Something 50-50 or 60-40, I'm not really excited. But as soon as we get up to like 65%, 70%, that's where I'm like, okay, we can make money on this.
How did you go from poker into trading commodities?
COVID hit, and I couldn't go to the casino anymore.
Why do you think people tend to latch on to wrong signals?
Kind of human psychology. Most of the time you're going to lose.
Steve, right now there's no shortage of information, data, or even strong opinions in the market. I know that you can listen to a lot of analysts, look at the same data, and still walk away with completely different conclusions. But you come from a background in poker where you're making decisions without all of the information. I was wondering, in your opinion, how similar is that to how the commodities markets actually work?
I think very similar. First and foremost, probably is bankroll management as an investor, in commodities or any. Otherwise, you have to have you've really got to have a framework for bankroll management. In other words, let's say you have an account that's $100,000. Okay. I like to only place 1% at a time. So in a $100,000 account, you got to have a pretty good reason for betting more than $1,000 on any.
I was going to say that's like your safe bet. 1% is a good place to kind of start out.
Yeah, I call that one bet. Right,
okay.
One bet is 1%. So if you put 2 bets on it, that's 2%. If you put 3 bets on it, it's 3%. Right. Okay. And it's the same way with poker. When I was playing tournament poker, I wouldn't buy into a tournament that was more than 1% of my bankroll. Mm-hmm. Right. Because at any one of them, you're only going to cash in these things probably 15% of the time. So most of the time you're going to lose, But the times that you do cash, you make up for a lot of money. So number one is probably bankroll management. Okay. Number two is just being able to take a loss, having stop losses, paying yourself when you win, so when you do get that double or triple, like being able to hit the sell button. I think a lot of psychology relates, are very, very similar from poker to stock trading and commodities. Pattern recognition, recognizing patterns of when people, maybe the way they put their chips in the pot. They slide their chips in very gently when they have a good hand, and they slam them down on the table when they don't. It's almost kind of like a reverse psychology trying to intimidate you kind of thing.
That's called a tell, right? Is that right?
Yeah, it's a tell. Yeah, yeah. If you recognize a specific pattern in one person, and that pattern is repeatable and accurate, then it's a tell.
Okay. Yeah. All right. How did you go from poker into trading commodities? What was that transition like?
It happened in earnest around COVID, and so COVID hit, and I couldn't go to the casino anymore. So we all went online, and there was a plethora of immediate poker players that had too much money and not enough skill. So that was really profitable. And so what I did was I was invested like kind of everyday investors, like a 60-40 portfolio. I went all to cash as soon as I saw the market starting to roll over. And I timed it pretty well by getting back into the market, essentially at the bottom. I mean, now it looks like I was psychic at the time, I didn't know. But my buddy actually found it, and he said, "Hey, I found the bet." And I was like, "What is it?" And he said, "Oil." And I said, "Oil?" And he said, "Yeah, oil's at negative $30 a barrel today." And I'm like, "Well, how is that possible?" And then he described, that they're trying to offload it, and they have no one to store it for them, so they're actually having to pay some of these people to store it for them. I'm like, "Well, that's not sustainable." So we went from essentially 100% cash to almost fully invested within like 2 days. It was one of the
That
most
seems
exciting
fast
trades
to
of my
me.
life.
I'm like,
What's
that
that?
seems great. I'm like, that sounds crazy. You said almost fully vested in 2 days. Yeah.
Yeah, what we're doing just so we could move was we were buying like oil ETFs, we're buying Exxon, we're buying Chevron, we're buying, what else did we buy? I think we bought Dorchester Minerals, we bought DCP, we bought yeah, it was all oil. You know,
Yeah.
it was that, and then I got back into the S&P 500 as well. But the oil ones were the ones that paid off. You know, going negative $30 a barrel was not sustainable, and turns out we're right. You know,
Yes.
people do still drive cars, and they
Yeah.
still use oil and gas, and yeah, that was a fun trade.
Yeah.
That was a fun trade. So after that, I realized that this is way more profitable than playing cards is, because
Okay.
to move up a level in poker, you know, you may go from let's say $1,000 buy-in tournament to a $2,000 or $3,000 buy-in tournament. Your competition doesn't get 2 or 3 times as good; it gets like 6 times as good. So
Okay.
to make more money at that game, you have to. It's one of those parabolic charts as far as skill level,
Uh-huh.
and stocks isn't, whether you bet 10 grand or you bet 100, your competition's essentially the same, unless you're going into micro caps. Yeah, it's just way easier to make money on stocks than it is cards.
Yeah. At a certain point, I guess it's not so much maybe about information as it is about decisions. What does your actual process look like from hearing an idea and then you decide to make a trade?
Okay. My filter, I guess, is I interview a lot of commodity experts,
Okay. Interview.
usually about 2 a week. And that's where I get a lot of my ideas. I've got a premium subscription of some highly intelligent commodity traders, and we all kind of bounce ideas off each other. So that's kind of where I get my feed, right?
Okay.
And from there, once I find out that, hey, we should be focusing on oil, or we should be focusing on gold, or we should be focusing on copper, then from there, I'm able to use my network to figure out, okay, what are the top 3 companies, you know, in copper that we should be focusing on right now.
Okay.
Then I use my, what's that?
Oh, no, sorry. I didn't mean to interrupt you. I was just going to say, I was thinking as you were explaining, because I was like, how do we go from big picture fundamentals to narrowing in on specific opportunities? But you kind of already started to go into that. So that's interesting.
Yeah. So, you know, we'll get the top 3, right? And I'll start pulling them up on the charts. And that's where I use my skill as a technical analyst to find out, okay, these are the 3 copper companies we should be focusing on.
Okay.
When is a good time to be buying them, right? The fundamentals tell you what you should be buying, and the technicals tell you when you should be buying it and when you should be selling it. And so that's where I just look at the charts, and then that's kind of where my pattern recognition from the poker days comes in, and it's a very similar skill, and that's where I time it. You know, so that's basically my process.
Yeah. And that's where, like you said, that's where the charts come into the process for you.
Yep. Yeah. Yeah. It's timing. It's like, when should we be pushing the buy button?
Yeah. If you're constantly hearing different perspectives, the real challenge, I would assume, becomes figuring out, you know, what actually matters. So what's your process for filtering through all the noise and deciding what's actually useful to you, like in this moment or in that moment?
Yeah, that does sometimes happen. You know, well, I'll interview 2 oil experts back to back, and they're both telling me different things. So what do you do? You know, sometimes it's easy and they all say the same thing, in which case they're usually right. You know, but sometimes, yeah, you do get conflicting views. And when that happens, I usually err on my skill, and my skill is the charts, and I go by what the charts are telling me. I may not know why oil would go down a specific week when everything in the news looks like it's going to be going up, and you know, but it goes down. And the way it was explained to me, and the way I try to explain it, is that the chart is a visual representation of what millions of people think that commodity or that stock is worth. And so collectively, kind of the wisdom of crowds, that's the action, that's the price, and like it or not, that's what it is. You know what I mean? So sometimes you can put yourself in an echo chamber, I think, if you just are listening to the same thing over and over again, and you're like, but it should be going up. Yeah, the chart says right there, 70% of the time it goes down. So that's kind of my deciding factor, is I listen to the gurus, take what they have in to say, and then I use my skill as a TA and come up with my own my own reasoning, I guess.
Have you ever seen any situations or where there's, you know, a lot of information, but most of it actually ended up being misleading?
A lot of it with oil.
Yeah.
Yeah. There was, especially when the war hit, $200 a barrel, $250 a barrel, and
Mm,
nothing on the charts were telling me that was going to happen.
yeah. Why do you think people tend to latch on to wrong signals or misinformation like that?
I don't know.
I was going to ask. My first
I
thought
haven't
was
really
I
thought.
wondered
I
if it
suppose
was.
it's kind of human psychology. Maybe there is some sort of like sick doom loop or something that we all are afraid of. I don't know. I haven't really given a thought to that.
I was wondering if it was because my first thought was like maybe it's fear, but then I was like maybe it's ego. Do you know when you just think you're like no, and like you can't get off of like the idea that you have or what you think it should be, like you're not for whatever reason able to move from that to a different conclusion or whatever. And sometimes I think maybe that's like a little arrogance or ego or maybe fear, a combo of all. I don't know.
One thing that's worked for me is I kind of decide before I push the buy button, like, what is my hard stop?
Okay.
What's my heart out here? Like, how do I, what'll show me that I'm wrong? Right.
Mhm.
And so, for example, right now we've got not a short position, but we're essentially betting that we've got an inverse ETF where we're betting that NVIDIA is going to fall. We're getting pretty close to the level where that's not looking like it's going to be the case, and we're going to be wrong. And for me, that point is if NVIDIA hits $205 a share, then I was wrong. Take the bet off. Don't lose anymore. Just get out. So I think having those defined levels up there and just being okay if you're wrong, like this is all a percentage game. You know what I mean? It's no different than poker. When you have pocket aces and the other guy's got pocket kings, you're going to win 8 out of 10 times. And the other 2 out of 10 times, he's going to flop a king, and that's going to be the end of it. Like you just got to take these setups, these singles, these doubles, these triples, and every now and then you get lucky and you get a home run where you have these percentage setups where I like to go for 65% or more. 70% is ideal, but if it's 55, 45, it's not worth your time. It's not worth the mental energy to have a position on that where you have such a small edge. Like you kind of wait for these good setups and then you take them.
Okay.
And if you're wrong, get out.
Yeah.
There's nothing wrong with that.
Yeah. So if I'm understanding correctly, a lot of the edge comes from being able to recognize patterns. So whether that's like poker or in the market. So then when you look at a chart, what are you seeing that other people might miss?
Wow, we could take the whole interview on that. I could show you a couple specific setups if you like. I could share my screen and
Sure.
there's just different different setups. This is the S&P 500 right now. And so basically we've had a really nice, this is Liberation Day. This is when Trump held up his chalkboard and tariffed an island of penguins and all the stocks fell off, right? And then we had this beautiful run up all the way up to basically 7,000 on the S&P 500. And then we've had to start a dump right here kind of around the war and recently had a bump up right here. Well, this is one tool that I like to use. I was taught this by another TA. It's called Fibonacci extension. Okay, so what you do is you take a recent low, run it all the way up to the high, and then run it down here to the low. And it literally puts like these lines here of price targets. I don't think it's a coincidence that this has come up right to this level. This is the 38.2% retracement right here. There's other traders that have this exact line on their screen, and that's why they're selling at exactly that point. And if we hover over these right here, we can see it's $7,147. And then today here, right, on Friday the 23rd, it hit again, $7,147. That's not a coincidence. This is a self-fulfilling prophecy that everyone's seeing the same thing I am, and they're hitting the sell button right at that level, right?
Okay.
And, the next level up after that will be this next line up here, the 50% retracement. If we break through here, I think there'll be similar price action around that level, and then the next one after that, right? There's all sorts of little setups that you can find in these things. Here's one recently that I shared with my subscribers on corn, okay? So this is a way that you could play the futures contracts through an easy ETF, and the symbol is CORN, right? Same kind of setup right here. We take the low. Now this time we're doing a retracement instead of an extension, but we just want to see where it's going to retrace down. And we take the bottom to the top, and we can see the price action bounced right there on the 61.8% retracement. And it also bounced right on the 200-day moving average. Like if I could write a book, maybe someday I will, I don't know. that would be probably my favorite setup, is that right there, where you have a run up in price, and then it retraces down right to the 61.8% retracement level. So meaning from here to here, you know, it's 0.6 of the way down, right? Bouncing right on the 200-day moving average. And all this is this is just an average. If you take the last 200 closing prices of all of these bars, each one of these bars is a day of price action. If you take the last 200 of them, divide by 2, it'll put the blue line right there. And so it's not a coincidence, I don't believe, that the price action came right down to that level, bounced on the 200-day, and then went right up. So those are some neat little setups.
And so because I was kind of, I'm obviously trying to follow along, and I'm wondering, like, so if we're all looking at the same chart, and then I'm like, well, how are some people not coming to the same conclusion that you are essentially?
Some of them aren't, and that's when the pattern breaks down. It's just that I could tell you that 8 out of 10 times when it comes down and hits there, it goes up.
Okay.
So, you know what I mean? And that's a bettable event. Yeah. Like you place 10 bets there, you're going to win 8 of them and lose 2 of them. And you got to be okay with losing the 2, but most of the time you're going to be right. Okay. You know, that's where the bankroll management comes in, of only placing, 1% of your bet on anything at one time. That way, if any one of them doesn't work out, then you don't care.
Yeah. In poker, so you're reading patterns in people. I'm not a huge gambler, so I play the slots. Okay. Like,
okay, yeah.
I really didn't want to admit that to you, but I play the slots. But I am aware that in poker, you're reading people, and in markets, you're reading patterns in price. Would you say they're very similar? Not really similar?
Between poker and this?
Yeah, between reading the patterns, I guess, in people, and then reading the patterns in the markets. Because I'm wondering if they are poker. Yeah, because I'm wondering, I'm like, okay, for the people at home that watch this that are playing poker, I wonder if this is going to make them be like, oh, well, I can go get I'm going to be able to read the markets then. Like,
I think so. It takes the skill set is pattern recognition, and so if you find that you're good at games like chess. Okay. You're good at finding constellations in the sky, like patterns of stars. If you're good at finding, like, if this jives with you at all, of like, oh, I can see. I mean, it's kind of like a soap bubble. It's coming down to the blue line and bouncing. Like, if you're good at recognizing patterns like that, if you're good at recognizing patterns in the poker table of little ticks that people have, that could lead you to the strength of their hand or the weakness of it. Yeah, it's pattern recognition in everything. Like, if you're good at patterns, then I think you excel at this.
Gotcha.
And some people got it and some people don't. Some people are an artist and they're just really good at drawing, and other people that look like a stick figure. Yeah. I think it's the same kind of thing. It's kind of like anyone I think can get to a basic level.
Yeah.
But to really excel at this, the best, like they're very, very good at patterns.
Yeah. When you look at charts like WTI or Brent right now, what do you think they're actually signaling?
Okay, here's basically spot price of WTI. And so what was interesting, so we had this nice spike up right here. This was on May 9th, I think? Yeah, May 9th. Had a nice spike up. And then basically what we put in here was it's kind of a bearish pattern, at least short term. And the reason is because you have this price spike all the way up to $120. And what we need to reverse this pattern is we need one of these closing prices right here to close above the high over here. And that hasn't happened yet. We got darn close over here, right? We got darn close right there. You can see the right tick on that was at $110, but we still had to get to 120. So far, this is still kind of in a, kind of a bleeding off pattern is how I would describe it. You can put in some parallel channels here to kind of give you some price points along the way. Now that we've broken out of that parallel channel, basically what we had here was we had what's called a bear flag, and that has worked its way down. Now we're getting a little bit of a bounce up. So this is kind of exciting. because now we're getting a little bit of a price shift out of the other way. I
was just getting ready to ask you. I'm like, what makes a setup go from interesting to I want to take action on this?
That's interesting. I guess it's the higher the probability, the more interested I become.
Okay.
If something's 50-50 or 60-40, I'm not really excited, but as soon as we get up to like 65%, 70%, that's where I'm like, okay, we can make money on this,
Yeah.
I'm
sorry. I was just going to say, when you are looking at the chart, would you say that's definitely something you're focusing on first? Like you said, when it gets to like 65%, you're like, ooh, okay.
Yeah.
Okay.
If I see patterns like I showed here in corn, I'm interested.
Okay.
You know what I mean?
Yeah.
Like
Okay.
that to me is a very bettable pattern. And a lot of my guys bet that, and they're in the black now from it. This one, I don't quite see a bettable pattern yet. I mean, I'm going to go to the 2-hour chart here. So every bar is 2 hours. So it kind of gives us a little bit more price action to go by.
Yeah.
And we're kind of in a little bit of a parallel channel here. Let me drag this down so that you guys can see it a little bit and see how we kind of broken out of that. Like we're trading here and kind of bouncing around, and we had this nice sell-off right here and then bounced up, and we've broken out of that parallel channel. So I'm starting to think that we're probably going a little bit higher here. And the level I'm eyeing right now, let me go back to the daily, is I'm kind of eyeing this. Remember the parallel that we drew before? If you can kind of keep a trend line like right around there, that's now going to act as resistance for the price action to go up. I don't know why. I got to believe that it's just millions of traders are drawing the same line I am. You know what I mean? But these things play off like too perfect for it not to be there. Just like the parallel channel that we drew before. I think this is going to be kind of our resistance. So how long before it gets up there? I don't know. It could happen tomorrow and go up to 105, or it could grind sideways for 3 weeks until it gets up to 111. You know what I mean? But I think that's going to be kind of your next, line of resistance right there. This isn't something that I'm ready to bet right now. Like I want to see a setup like we saw in corn. But banana in my head, I think that's the direction it's going. I think we're probably going to go up to there. If we don't do that, then what's going to happen, I think, is we're basically going to have that parallel channel that I drew before, and this will act as support. So basically this will come down and hit back down onto this, and that will act as a little springboard there. But nothing that I could really see betting right now on it, but that's kind of where I think it's going.
What's a pattern that tends to trap most people into the wrong trade? If they're, I guess that's maybe that's a loaded
probably
question,
a dead cat bounce.
Okay, what's a
basically dead cat what that is when something is in free fall. And let me see if I can find an example for you. Oh, probably nickel. All right, let's go to the nickel chart. Let me pull up this one. This one's a little easier to see. Okay, so a dead cat bounce is basically when something is just falling. And then it hits a bounce, and then it just rolls over and just keeps on going. So I don't really see one here. I was trying to think. Yeah, okay, here's kind of a dead cat bounce. All right, so see how nickel just shot way up here, and
that's actually kind of crazy. Well, it looks crazy on the chart. I'm like, it skyrocketed.
It did, yeah. It skyrocketed, right? There was a squeeze, and then it fell, and see how it bounced. And then it just kept going lower,
kept falling,
right? So this is kind of like a dead cat bounce, is like buying it here, and then it goes up, and then it just continues to bleed out, right? That one I think kind of traps people because they see this and they get excited and they buy in, right? And then they're like, oh, I'm getting it cheaper, and then it just the narrative has changed and it just keeps on.
So how do you know like when to act on that and when not to, instead of I guess waiting or second guessing?
Well, I never buy these. Right. I don't touch that. My game is like finding this before everyone else does. So like here with nickel, since we got it up, basically I was buying nickel all back here. So this is like a 2-year time frame where it's just boring, no one cares, and this looks like the EKG of a corpse, right?
I was gonna say there's not much going on. Yeah.
Yeah. You want to buy the stuff that's just flatlining, but it
Okay.
has an amazing fundamental story behind it, which I get from my guests, right?
Mhm.
And so basically, the fundamental story behind nickel is
Mm.
that Indonesia supplies the world with about 2 out of 3 pounds of nickel, right?
Okay.
That one little country is supplying the whole planet with nickel, which is
I
used
did
in
not know
making
that.
chrome.
I had no idea.
Most people don't, right?
Yeah.
I wouldn't have known either
Yeah.
if my guest hadn't told me, right? So most of our nickel comes from Indonesia. The problem is that Indonesia is absolutely destroying their shorelines and their forests to do it. Lateritic nickel is very dirty, right? You
Okay.
have to use a lot of sulfuric acid to mine it, and they're essentially just washing the tailings out into the ocean. Okay, so this was a bet that the Indonesian people would finally rise up to their government and say, "Hey, we're destroying our landscapes. We can't
Yeah,
even
enough
fish
is enough.
anymore. Like,
Mhm.
you need to fix this." And so what we see in the nickel price here, if we zoom in here to the end of last year and this spike, the Indonesian government finally did something. And they
Okay.
said, "Hey, we're going to curb our exports of nickel so that you guys can clean up your act and stop polluting our waters." Right.
Mhm.
So these were a lot of Chinese companies that were coming down into Indonesia and basically wrecking the landscape and taking the nickel and leaving the poor people with the mess.
Yeah.
Okay, so that's the spike right here of like, okay, well, we went down here from $6.50 a pound up to $8.50, right? Now, this is kind of where I come in as a technician. All right, I've already got my positions established. Okay, now I was like, okay, we're right. Don't get too excited here, right? Okay, it actually happened. And now, as a chart technician, we can see this pattern right here is what you call a bull pennant. And basically, what it is, it kind of looks like a windsock at an airport, right?
Yeah.
So, the price spikes up, everyone gets excited, then they start taking profits, and everyone realizes that the paradigm has changed. This is not going to happen anymore, right?
Right.
That was a thesis that played out, and this is the new reality. And people are just buying and selling. And then here you can see in the last week and a half, we've broken out of that pattern. All right.
Yeah.
Now we move from when we were forming this out, I was like, okay, this is a 7 times out of 10 bet right here. Now that we've broken out right here, we just went to 85%. Okay. So only 15% of the time here are we going back down. The other 85% of the time here, this pattern, we're going up. And as soon as we break this high right here is at $8.66 per pound. As soon as we break that, we move into the 90 zone, right? And if we go above that, I'm kind of getting into the weeds here, but if we go above that trend, that horizontal line right there, and we break out and come back and then bounce up, it's a winner. Like you got it. You know what I mean? So that's an example, I think, of where I take the fundamental story, establish my position, and then I use the charts to get my percentages higher and higher. And I mean, 85 times out of 100, like you're not going to get much more than that. You know what I mean?
Yeah.
But that's what this chart is telling me. And that's what's happened here in the last week and a half is it's broken out of that. Everyone else is seeing the same situation that we are, and it's going to take off.
Even with a strong view, I guess execution is where things can tend to fall apart. How do you go about managing your risk on each individual trade?
That just goes back to, I guess, certainty. So like when I look at the overall breakdown of my portfolio, about 30% of it is in gold, 10% is in silver, copper is probably around like 12, oil's like 15, you know what I mean? So the certitude of how I feel of, what direction the market's going to go, that's basically where I allocate capital. And then as far as like company risk, if I've got, I think, like one company I'm pretty confident on. So it's like 5% of the portfolio, and others I'm much less confident on, and they're just trades. So it might be half of 1%. I suppose it just goes with conviction.
Okay. Yeah. So, I've learned from you that patterns are important, being able to recognize patterns, and that also patterns, like even when they repeat, though, most people or a lot of people still don't succeed. So if the patterns work most of the time, then why do most people still lose money?
I think a lot of people, maybe a lot of people just don't look, I think a lot of people don't pull up the chart. I mean, I remember when I learned about charting 8 or 10 years ago, I was like, oh my God. Like before, I was just hearing a hot tip on a stock and I would just buy it. And I didn't even know that like looking at the chart was
Yeah.
something.
Okay.
And now that I can stop and take a look at the charts, like
Mhm.
yeah, it's like magic. You know what I mean? Like it
Yeah.
tells you the answer, you know?
Yeah, because I was kind of wondering because I'm like, when people lose, I'm like, is it execution? Is it timing? Is it emotions, like emotional decisions that cause that? But if I'm kind of grasping things, that chart really can help you execute things better.
Oh God, yeah.
Yeah.
Look at this one. So this is uranium. Okay. So this is the Sprott Uranium Miners ETF. So I've been betting on uranium now. All the green arrows are buys and the red
Okay.
arrows are sells, right?
Okay.
Okay. So I've been buying into this thing since like the end of 2021.
I see a lot
Very
of buys.
tradable.
A lot
You
of
know what I
buys.
mean? What's that?
I see a lot of buys, a lot of green arrows.
Oh yeah. And
Yeah.
and look, it's not like, I mean, you can go back to my shows and watch, like I literally am buying right here. Like
Yeah.
you and it's not magic. What it is I'm just finding these pullbacks, right?
Mhm.
Of where to execute. And then on the upside up here, I'm using the technicals in the charts to find out good exit points. And that's basically it. I mean, like you look here at the RSI and the MACD, look at where they are on this red arrow right here. It's all the way up at the top, right? The RSI is at 74 or 71. Whenever it's above 70, alarm bells should be going off in your head like, hey, might be time to take some profits, you know? And down here on these ones, I mean, if we look here at the RSI on some of these green arrows right here, it's down low, 30, right? Got all the way down to 24, right? If it's below 30, alarm bells should be going off in your head. Hey, it's probably time to push the buy button. And so that's all this is. Like this is one of those where you have to trade it. And so that's exactly what I do, you know. And we recently had this run up right here. And so I took almost all of it off the table.
Okay.
I've been adding back in right here. And look, this is my take profits line. Not scientific at all. I just see that the high over here is like 84, 85 bucks.
Which is
and
very
so
high.
I think a lot of people are going to be selling at 84 or 85 bucks. And so I'm going to jump on that train and do the same thing, you know, but I'm not taking anything off the table until we get up there. And I'm very certain we will.
Yeah. For someone watching this and they're trying to make sense of everything, how should people think differently if they want to make better decisions in this kind of environment?
I suppose I would honestly just start with a free version of this. I got a link to it on my website. I would start with get the software. Without it, you can't do it. So I'd get the free software first. I've got a little trading program for for people that are interested. I show you literally how to set up your charts click by click, and you can go through that program, and that would at least get you started. You know, but if this is at all interest to you, I would start. You can watch my channel. There's other TAs out there as well. Just start absorbing it, and I start with the fundamental case first, so that you know that you're betting in the right sector. You know, like I described with nickel, and then pick the best nickel company and start going from there. You know, but yeah, I would get the software. You can't have all your bells and whistles on here like with the free version. You know what I mean? You got to pay to get a lot of this stuff, but it'll get you started, and it doesn't cost anything.
Yeah, and I wanted to also ask you, what opportunities do you see here before the end of the year that you think could make some money that we can let the people know about when they watch this episode?
Okay. Yeah. The nickel one is big. And so definitely that one. I think nickel, we're breaking out right now. Be looking for it to clear this high. And I expect it's going to do that, 8, 9 times out of 10.
Okay.
Another thing that's really nice about this bet is for those Indonesian nickel miners, they are very, they use a lot of sulfuric acid to mine those lateritic nickel deposits.
Okay.
And a lot of their sulfur supply is now getting interrupted because of what's going on with the Strait of Hormuz. So I think that's what's causing this little breakout right here is not only do they have to clean up their act, but they're now running out of sulfur or sulfuric acid to mine. And so they're not able to mine as much. So whatever nickel deposits are outside of there, I think are going to do really well. So that's one. Another setup is with the hiccup around natural gas. There's a lot of natural gas inputs that go into fertilizers. And so I think some fertilizer plays that could be interesting might be like Nutrien, ones that are less dependent on getting their
I've not heard of that.
What's that?
Nutrient? I've not heard of that.
Yeah, it's I can pull it up here. It's a NTR. There we go. Yeah, so this one right here. So we recently, I think this was people FOMOing in, right? We recently had a nice little sell-off. I started to draw it right here. That's a bear flag showing that it's likely going to come down. So if you wanted to get into Nutrien, I think a good starting point right here is $68, then 61, and then this would kind of be your stink bid line. Like, I don't expect it's going to get down to 55, but it might, Okay. So, but yeah, I think this company could benefit. I also think that some of the softs. So basically, if we don't, as a planet, have enough fertilizer, that should, especially with the planting season that's just gone on right now, that should produce less crops. So what crops are available, there should be less of them. And so I think betting on, it's kind of a second order effect, right? And I don't think the market has totally like put that together yet. You know what I mean? They haven't seen that, like, okay, well, we're not getting as much sulfur, so these fertilizer companies are getting less fertilizer. That means we're going to have less yields, and that means ultimately less food. Okay, so I think like this one here, the corn one, I think this one could do really well. There's other agricultural ETFs that are out there that I think could do good as well. But I think basically what you want to look at is you want to think like, okay, what crops take a lot of fertilizer inputs? And those are the ones that are probably going to be affected the most. And when there's less of them, people will pay more for the same thing. And so I think the price of that will go up.
Okay. After everything that you've seen in these markets, what's the biggest mistake people continue to make?
The biggest mistake that people continue to make, probably just staying in when they're wrong. Okay. The thesis didn't play out. Just strong and wrong, you got to be willing to let it go. Well, ego does not serve you in this game at all. It just makes you lose money.
Yeah. Sometimes people are committed to, like I told you, they just can't get off that thing the way they thought it was going to be or should be, and they just can't move from it. So
yeah, I mean, some of these things, especially like I get into a lot of the like little tiny junior miners and stuff, and those things will sell off, I mean, radically, like 10% for no reason at all. Just one guy was just clearing his balance sheet. That was it. I mean, it's pretty amazing the way those can run. So this may not apply to that, but if your thesis is wrong, if what you thought was going to play out didn't, live to fight another day. And those 1% bets that I'm talking about, it's not like, oh, I was wrong, so I lost 1%. No, hopefully you trimmed after 10% when you were wrong, and you still have 90% of that 1% left. You know what I mean? Like, hopefully you're not just running this thing into the ground.
Yeah.
When you're wrong, push the sell button. When you're right, let them run.
Yeah. Well, Steve, I really appreciate you taking the time to talk to me today. Thank you so much. It's been a treat to learn from you. I want to make sure we let all the viewers know where to find you, how they can connect with you, and what kind of options they have for, getting hooked up with you. Oh,
thank you. If you like the way I think and you want to see more, I've got a free YouTube channel, and I've got a free newsletter where I interview the commodity experts every week, and every weekend I go over the charts, kind of like you saw here. If you're a little more serious and a do-it-yourself investor, I've got a premium service where you get a weekly charting video of my personal portfolio. You get a portfolio snapshot of the company, share counts, dollar amounts that I'm in. You get bonus interviews from our guests. You get flash updates. So basically, anytime I buy or sell a stock, I let you know first.
That's awesome.
You get recorded phone calls from my trading partners. We've got access to a private premium subscriber chat. So if that sounds interesting to you, you can find all that at stevebartonmoney.com.
Okay. Well, hey, thanks so much for your time. I appreciate it. And it's been a joy to talk to you.
No, you too, Ariel. Thank you very much. Thanks for having me on the show.
Have a good day.
You too.